Hi everyone, and thank you for tuning into my channel where I talk about stocks and investing. I post videos daily, so if this sounds like something you want to get more of, subscribe down below. In today's video, we're going to be talking about Chewy's second quarter earnings report. The company reported solid performance amid a difficult macroeconomic backdrop. So let's get right into it. Some of the key takeaways from Chewy's second quarter earnings report was that despite rising inflation, Chewy managed to expand its gross profit margin by 60 basis points year over year and its net profit margin by 170 basis points. You might be aware prices are going up for nearly everything worldwide, and so despite these pressures, Chewy's ability to expand its profit margins was impressive. They did this through both increasing prices on the products they charge on their portfolio of products, and they also found efficiencies in their supply chain. From both sides, they were able to expand the profit margin, and this is impressive. Moving on to the second key takeaway, which is that customer growth was flat from the previous quarter. Chewy experienced substantial customer growth since the onset of the pandemic. If you recall, Chewy is an exclusively online pet retailer. So when brick and mortar stores were closed at the onset of the pandemic, millions of customers flocked to Chewy to get their pet food and get the food and the needs of their pets met. But now that economies are reopening and brick and mortar stores are operational again, some customers are choosing to go back to their local store to shop for their pets' needs. So that's creating a headwind for Chewy's customer growth. It's also creating a headwind for their hard goods category, which decreased year over year. And you could think of hard goods like toys, uh, beds for your pets. You could think of crates, maybe a doghouse, things of that nature that are not recurring purchases like foods, but more one time in nature. So sales of those types of products boomed at the pandemic's onset, and now they're slowing down. Another key development in Chewy's second quarter was that it's ramping its third automated fulfillment facility, and management noted that this one is coming online faster than the previous ones are. So it's demonstrating a solid learning curve, growth on the learning curve here by bringing this facility online faster than the others. This is also going to help Chewy expand margins because if you are aware, or if you may not be aware, wages are increasing for employees, and Chewy's been having a hard time fulfilling its staffing requirements in its fulfillment facilities. So by having an automated fulfillment center, it will reduce the requirement for labor and help expand its margins. Another key takeaway from this report was that Chewy's net sales per active customer hit a new record at $462. This was up by 14% year over year. This is helping offset some of the downside from slowing customer growth, because even though customer growth was flat, each customer was spending more money at Chewy. And this has been true for several years now. Chewy's CEO has been talking about this, where customers start off spending a certain amount of money at Chewy, and then as they mature in their second year with Chewy, they spend even more. In their third year, they spend even more, and it continues to grow. And there's evidence of this when looking at the net sales per active customer hitting a new record at $462. However, Chewy did lower its annual revenue target for 2022 down to 10 billion, which would be 12% year over year growth. This was down from the previous estimate of 10.3 billion at the midpoint. In my opinion, this was the biggest contributor for Chewy stock falling roughly 9% on the day following its earnings announcement. This is what investors were most disappointed about, the decreasing of the annual sales target for the rest of 2022 with just 2 quarters remaining since it's already completed Q1 and Q2. Finally, Chewy increased the adjusted EBITDA margin guidance for 2022 by about 100 basis points. Adjusted EBITDA is earnings before interest, taxes, depreciation, and amortization, and the adjustments are for some non-cash items like stock-based compensation. So that was good news for Chewy expanding its margins, and it follows up on the story of that we noted earlier where Chewy's margins were expanding, gross profit margins expanded, and net profit margin expanded. So kudos to management for delivering profit expansion in this difficult backdrop where margins are being compressed across the board through rising inflation and all sorts of other troubles. So for that, in that regard, Chewy's management gets kudos from me. Overall, I would say it was a solid quarter, solid execution from management on its initiatives. The backdrop, the macroeconomic backdrop is extremely difficult. Chewy's business boomed at the pandemic onset when millions of customers went to it for their pet needs, and that trend is now reversing along with all of the other stay at home trends, and as consumers choose to spend money on away from home experiences and less on online sales. So despite that difficult backdrop, Chewy did a solid job. In my opinion, I would grade this quarter a B minus for Chewy. So let me know what you think in the comments down below. If you liked what you saw, please subscribe down below for more videos like this daily. Thank you for watching.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.